What's up, boys? CryptoNetic here, back at it again with another sponsor. This video is brought to you by BloFin. I'm happy to say we have a sponsorship with BloFin. If you want to support me in any way, please sign up using my referral down below. I'll leave it in the comments. It's a great exchange. You'll get some bonuses, of course. I gotta hook you up, guys. So that's about it, and let's go on to the video. Bitcoin is above 59K. And we managed to actually get it almost all right. And I'm saying almost because I didn't say that we will continue going past 59K. So this whole move, we actually got it completely right. Like if you guys remember from the second to last video, we actually said, if we have a few days of consolidation like we did here, maybe we get another move up. What happened? We had a few days of consolidation right here, and we got a violent move up, like really, really violent, which is amazing. Then, in the last video, the one from Monday, I said there's a lot of inefficiency and low liquidity in the levels between 55K all the way up to 58K. What happens then? We go straight from 55K, like look at this, in a single day or two daily candles. Like from, let's say 55K was tagged here, all the way up to 58K in the matter of like 12 to 24 hours. Like, what else can I give you guys? Of course, we had some leverage plays happening, but most of this whole move is predicted by us. So, what else is there to say? Now, why didn't we go down when funding was extremely high? Well, because most of the market actually wanted us to go down. Like the fact that we had a lot of accumulated longs in the past few hours, few days, is concerning. But the fact is that still a lot of people want us to go down. They are not in on the move. They are still sidelined. And that is what actually fueled us to go much higher. Now, if you see, and if you followed the sentiment in the past few days, you could have seen that a lot of people actually wanted to short 58K, which I knew would happen. Like I knew we would get a lot of shorts piling in at 58K, and that actually managed us like right below 58K, just to be precise, like right around this level right here. A lot of shorts were piling up, and that is what fueled us to go past 58K and now going above 59.4. Actually, that is actually crazy. So what is the next thing? The next thing has to be checking out the whole rainbow chart thing that we have here. Like you can probably see how respected these levels get. While even when we are in vertical accumulation, like even when we are vertically accumulating like we are here, we are still respecting the levels. If you guys remember, if you guys watched this video, you remember, and if you didn't, please check out the video. Like we went for like 15 or 20 minutes just charting this shit out. This was a clear chart before we started the video, and after we've done it, we have this whole thing, which is extremely confusing, but it doesn't matter because you don't use the levels below, you don't use the levels above until they get relevant. So you can easily see, if you go to the 1 hour time frame, easily see this whole level. First up, it becomes a resistance, it gets retested 55K as support, goes up to 57.5. which is probably the fib, as far as I remember. Yeah, it's the fib. And after it goes there, resistance goes straight through. The first thing that becomes the slightest resistance, like you can go on the 15-minute time frame, it might not even be resistance there, but this is significant because it pulled back from it and retested it above. 2021 February high. Like it's such a fucking random level when you look at it. But if you want to trade it, you can still see that it has relevance. So now what is happening? We are trading right below this level. Actually right above now, but this whole 59.397, it's a daily level that we charted out previously, judging by the color. Okay, let's just go and check it out. Yeah, it's a daily level, this whole daily close level, and this right here. It's a daily level, and look at how significant it is. Like it's from 2021, guys. It doesn't matter. It doesn't matter. You can use everything at your disposal. So that is something that I wanted to do. What we might as well do now is just chart up a few more lines, which I'll do off the video and just come back because I don't want to waste time. So I'll go right to it and I'll come back to you guys. Okay, I'm back. You can see we got a lot of data filled in this whole area, and you can also see most of them are basically daily levels, which don't have such significance. But I just figured why not? Like, why not have even more confluence? So we are currently entering a relatively high resistance area. Like this level right here, this weekly level. Let me just go back and show you. This basically dates back to these, like a little bit below them. But these two highs wicked here, this one lows wicked here, this one high wicked here. So a relatively dangerous area. Like you should be cautious around here. So that is something. This whole thing right here is a daily supply area. So a relatively high resistance zone. I'd be careful here. Like I don't know how much juice we have left in us, and I know I've said this previously, but we've went past all the targets, so now it actually becomes serious. So as well as that, we also have a few weekly levels here around 61.5, mostly daily levels. I don't want to be covering them individually. So April high is at 64.8, October high is at 67k, and the weekly high is at, and the yearly high is at 69k. So those are the levels to keep an eye on. Like you can see, the granularity here is not as high as it is in the lower levels, because it is not as relevant here as it will be when we come up in the price. So that is something to keep an eye on. So yeah, how do we know where it goes from here? We don't. It's as simple as that. We play it level to level. That's what we've already done, and that's what we have to continue to do if we want to be profitable. Like holding spot, of course, that's a whole different story. But playing it level to level here is the way to play it. Like play it of the 0.5, go to the 0.618, go to the 0.5 and 0.786. Like, keep it simple. Don't overcomplicate it. Just play it level to level. And now that we've gone past all these levels, we aim for new heights. Like in the macro scale things. Like you don't want to be playing it dumb and going blindly. Like this is our next target. If we pull back below this, this is our next target. 48. Like I don't know what to tell you guys. Of course, those are the macro targets. Of course, this is a good support zone and demand zone. Once I mentioned supply, I have to go into demand. Like this has to stop it, but of course, this is a possibility. Like 55k is a possibility. Like play it level to level. Don't overcomplicate it. Also, one thing to keep in mind is the fact that we are above both the 0.618 and the 0.75. You could count in the 0.786, but it's less relevant. And we are above these levels for the first time before the halving that's ever happened in the past bull runs. Like let's say it like that. So I don't know if that is bullish. I don't know if that indicates a completely different market movement. Like you have to factor in the fact that ETFs are bringing incredible amounts of volume. Like the ETFs have more volume than we've ever had in the past few days, just because the institutions and the bigger people, like the people with a lot of capital, are getting into Bitcoin. So of course, what is there to expect than just having a completely different market structure? So keep that in mind when looking at the macro picture. Now, something that I wanted to talk about is Bitcoin dominance, which is rallying, but that is expected. Like you have to expect Bitcoin dominance rallying when Bitcoin is rallying. Like going this crazy, also have no time to catch up. Like most people will just long Bitcoin and leave the old behind, because that is just how money flows. So having Bitcoin above 54% is relatively expected. But the only concerning thing now is if Bitcoin crashes from 59k, Like if we actually get a crash to like 55K or something, alts will get obliterated. And that's just how it goes, because having Bitcoin dominance above 54, 55% is a bad indication for altcoins. And if we do crash from here, and alts don't get their chance to catch up because they're still lagging a lot behind Bitcoin, if we don't get a chance to catch up and Bitcoin falls, alts get obliterated. Like if Bitcoin falls like 5 to 10%, alts go down like 20 to 30%. So be really wary of that. So if we do like a dip and keep ranging on BTC, like maybe range in this zone, gather some liquidity, that would be perfect for alts, because that would give them the space to actually catch up and maybe overshoot above BTC. But ranging is generally the best thing after a big move. So if we get something like this, expect alts to rally. If we get something like this, expect alts to rally. If we do a move like we did here, like going up, starting to range, but don't give enough time for alts to catch up and just crash. Like this is not a big crash, I'm just giving you an example. And crash, like, yeah, this is actually a big crash. It didn't seem as big at first, but 8% crash. Can you imagine what alts do if Bitcoin crashes 8% with the dominance being above 54%? Like if we go to 55, maybe 56%, like maybe we get above these highs on the dominance chart. But yeah, wouldn't be the best thing for altcoins. That is all I'll say. An additional factor to this would be if Bitcoin actually crashes, with altcoins being this weak, they'll pull back so hard and not be able to recover that money will flow from altcoins back into Bitcoin. Like even the money that was left in altcoins, it'll flow back into Bitcoin, giving it a chance to recover and making them and setting altbacks back even more than they are now. So this really wouldn't be a nice thing. Like you don't want Bitcoin crashing from here if you're all in on alts. Just because, judging by the fact that they weren't able to catch up in the past 2 weeks or so, like alts not being, yeah, in 3 or 4 weeks, it doesn't matter. Let's say in the last month, they weren't able to catch up. So going down even further will be terrible for them. And now let's go over the liquidity levels real quick. This is a 12 hour, so you can see we have liquidity mostly above us actually. So this could be grabbed really soon. Like this is like 59K, 59.7, so might as well already be grabbed. And to the downside, lower liquidity levels here, mostly gathering around like 58, 57K, I guess. You could see the most liquidity is at 60.3, and to the downside, yeah, 61.4, but that's far away. And to the downside, 57, yeah, 57.3 is the big liquidity level. By the way, again, shout out to Pizza Man. He's the guy bringing me all of these charts. So yeah, this is the 7-day chart, 61.9K and 62K, as well as to the downside. I don't know. Yeah, we don't have the levels to the downside mark, but basically around 50K. The big liquidity is right below these lows, so look out for that. Now let's talk about what the move is if you're sidelined. Like if you don't have money in the markets here. No matter how crazy it sounds, you're not that late, because maybe you won't get the generational wealth entries that you would have got if you listened to me back at 20K and below. But however, we've seen, and what we have seen with alts is basically nothing. Like the crazy 50% pumps, 100% pumps every single day is a place of peak euphoria. And you may remember that when we were in the last bull run, but we are nowhere close to that. Like we do have like 50% pumps on some altcoins every few days. But back then, you could buy any single coin and just hold it for 3 days and you'd be up like 50%. That is peak euphoria. That is when you are too late. So we are nowhere close to that. So keep that in mind. You can still get fine entries on most alts, but you have to wait for a pullback. And how to know when to actually buy? Like, you have to focus on Bitcoin, as it is the #1 predecessor of how alts move. Look for drops like that are like 10%, 15% and higher, because that will crush alts. Look for strong, and when the alts are down, like let's say when Bitcoin goes like 10% drop would be around 53, 54K. Alts will be down a lot more. Alts that will crush them. You can expect ETH to go like a 20%, 30% drop easily. When you see alts being resilient and not pulling back as hard as the others in the market, like INJ is a good example of doing that. Solana is a good example of doing that. Like, they might not do it next time, but I'm just giving you an example. You look for strong and resilient coins that will not pull back as hard as the other, or altcoins that are strong, that are resilient, that will not pull back as hard as the others will. And you buy them. Like, you buy them because they are the ones to rebound the highest. Like, they are the ones to go first to the new highs, to go first with the highest pumps. And when you actually capitalize on that pump, like on the initial move, you can feel free to rotate your money, like do what you will. Rotate your money into alts that you like, maybe even hold them. Like, why not hold them for the next move? Just do your thing. But the most important thing, when trading, when buying, when investing, it doesn't matter. You have to adapt to the environment, because markets can stay irrational longer than you can stay solvent. So if you see a shift in the sentiment, if you see a shift in the market structure, in the trends, you have to adapt. Like, even though you have conviction as a bear, you can't fade a bull market rally, bull market trend, and vice versa. Like, it goes both ways. So you have to be fluid like water, and you will make a lot more money than if you stuck to just one bias. Because if you are stuck on one idea, you don't open up your vision to what is coming, to what can come in your way, and you can capitalize on the moves if you just adapt. Like, imagine if you continue to be bullish, to be bearish right here. Like, you see price going up, you see price reclaiming these levels. I'm giving you this example because this is when I flipped bullish. You see the price flipping these levels, and you're like, yeah, it's a fake run. I'm not going to be bullish or whatever. No, you have to adapt. You have to think, what if this is actually the move that goes up higher? And it did. Like, you have to play it level by level, and you have to adapt to what the market gives you. So guys, that is basically it. That is most of the things that I wanted to say. I wanted to cover the whole market. I wanted to go over all the things sentiment-wise and price-wise. So just be careful. I'll keep you guys updated. If you want to support me, please do it via BloFin, or you can also do it via Femix, because we are partnered from before. This is a new partner, so I wanted to shout them out in this video. Like the video, please. Subscribe if you're not subscribed. Leave a comment down below just to help with the engagement, and I'll see you guys in the next one. Goodbye.